Hello, child of God. This is CPA Shadrach Adino, an expert on wealth creation and management. I'm also a practicing auditor and a financial management consultant. Above all, I'm a born-again child of God and a pastor. May I take this opportunity to welcome you, dear listener, to today's episode. On today's episode, we are going to handle an interesting topic on how to invest in money market funds in Kenya. Now, before I take you through the procedure, I want to say thank you to our subscribers, because where we have reached is because of you. We thank you for your support. And if you are watching this episode today and you've not subscribed, we encourage you to join us by subscribing, like this video, and help us in sharing this video with all those on your contacts. Thank you. Now, over to the procedure on how to invest in money market funds in Kenya. Step number 1, pick a professional fund manager. Now, in picking a professional fund manager, I advise you to go through due diligence. You need to look at the background of that fund manager. Now, to do due diligence so that you don't go wrong on your choice of the fund manager, I advise you to consider the following factors. Number 1, look at the past performance of the fund, probably in the last 5 to 10 years. In looking at the past performance, just look at their website, because the website is going to give you details on how the company has been performing. Now, the other area to go to look at the past performance is the Capital Markets Authority, because they also publish reports on how various fund managers perform. The third item to look at in choosing a professional fund manager is whether they offer deposit protection. You've worked hard to get your resources. You don't want just to throw your hard-earned resources to a place where you are not certain about the future of your resources. Now, find out if they offer protection for your deposits. If they do, that's a good fund manager. If they don't, please think twice. The third factor to consider in coming up with your choice of the fund manager for your money is, what is their interest rate on investment? What amount of interest will they give? Different fund managers or different companies in the market give different rates. And I want to tell you, you might probably want to go for a company that gives good rates. And the first factor in deciding that this is a good rate for you is whether the rate is above the current prevailing inflation rate. If you get a company that is going to give you inflation rate, which is below, is going to give you interest on your investment, which is below the inflation rate, that is not a good investment. But if you get a company that will give you interest, which is more than the inflation rate, I would say that's a good company. However, there is not the high inflation, the high interest rate that you're supposed to zero in on only. Please, it should be a high interest rate, but the company is also stable, because if you get some company that is giving a high interest rate and it is unstable, please don't go for it. The fourth factor to consider when you want to choose a fund manager is period of existence. How long has that company been in existence in that business? You would prefer a company that has several years of experience other than just a company which has just entered the market. You should entrust your money with one who has a lot of years of experience. The fifth item to consider when you want to come up with a good fund manager for your money is how much fees do they charge. Different companies charge different fees. The kind of fees they charge are called management fees. Some charge processing fees, some charge transaction fees, some charge penalty. Now find out what kind of fees do they charge, because when you find a company charging high fees to manage your money, my friend, you're not going to benefit from that money. You better go for a company that is charging low management fees. And generally, companies charge 2% or 1 to 1.5% as management fees. The sixth item to look for when you're coming up with a professional fund manager is their investment portfolio. Now, where do they invest your money? Do they invest your money at places where you consider it as stable, or they go for high-end investment with a lot of uncertainties? Please consider carefully where they invest your money. The seventh item is the market share. The bigger the market share, the more assurance you have that your money is safe. Now, step number 2 in how to invest on money market funds in Kenya is fill application forms and provide personal documents. Now, once you've chosen that company or that money market fund manager, normally they will tell you to fill certain application forms. And after filling certain application forms, they will also require you to produce certain documents. The documents that they will require you to produce include ID card copy or passport copy. Number 2, they will also request you to produce KRA PIN certificate. The third item, they will request you to produce your bank details. And normally the bank details that you are going to produce include a cancelled check or a bank statement. Now, the third step on how to invest on money market funds is, now it is time to produce initial capital. You're supposed to part with the money and give. Now, various fund managers have various initial deposits that they require you to produce. Now, for example, Zimele money market funds will ask you for only 100 shillings as the initial capital. And then the subsequent top-ups will be a minimum of 100 shillings. Sanlam Money Market Fund will require an initial capital of 2,500 shillings and a subsequent top-up of 2,500 shillings as a minimum investment. Apollo Money Market Funds will require initial capital of 10,000 shillings and subsequent top-ups of 2,000 shillings. Now, Nabo Africa Money Market Fund will require initial capital of 100,000 shillings and subsequent top-ups of 10,000 shillings. NCBA money market funds will require initial capital of 5,000 shillings and subsequent top-ups of 5,000 shillings. And there are many other companies, but those were just a few examples. Now, I want to give you a few fund managers in Kenya so that you may pick any from them if you have a desire to know which ones to go for. Number 1 is Saiton Money Market Fund. The second one is Zimele Money Market Fund. The third one is Sanlam. The fourth one is Nabo Africa. The fifth one is CIC. The sixth one is Madison. The seventh one is Apollo. The eighth one is Dry Associates. The ninth one is Coop Money Market Funds. And the 10th one is British America Money Market Funds. Now, dear listener, let me give you advantages that will accrue to you if you invest in money market funds. Number 1, your investment is secure. Now, I'm saying your investment is secure because money market fund managers are licensed and regulated by the Capital Markets Authority. That should give you assurance that if I'm dealing with a regulated company, then that my money is safe. The investment that I'm going to put there is safe. Now, the second advantage is that money market funds prevent spending. Now, if you were to hold that money in your house, you would easily spend it. But if you put that money in a money market fund regulated and managed by a different company away from your residence, it will prevent you from spending it. That is an advantage. Now, the other advantage is money market funds investment inculcate a culture of savings, because it allows you to save even on a daily basis. It allows you to save even on a weekly basis or on a monthly basis. In other words, what I'm saying is, anytime you get your money, before you rush to spend it, there is a provision for you to invest it with a fund manager, a money market funds. So by enabling you to deposit your money regularly, it inculcates in you a culture of savings. The other advantage, number 4, is the interest rate exceeds the rate of inflation. That means instead of leaving your money at a savings account in a bank, if you put your money with the money market fund managers, the interest rate will beat the inflation rate, and therefore your money will not be watered down. Your money will not be eaten up by inflation. Instead, your money is assured of growth. Now, the other advantage, number 5, is the initial capital for investing in money market fund is quite affordable. I've just shown you that there are some companies that will accept as low as 100 shillings. Some will accept 1,000. Some will accept 2,500. Some will accept 5,000, depending on your strength. The initial capital is quite affordable. Now, the advantage number 6 is it is very liquid to invest with a money market fund. Liquidity here, I mean, anytime that you want access to your money, you will get that money available to you. Some accept it with almost immediately, like NCBA Bank will give you access to your money immediately. Some other fund managers will ask for a notice of 2 to 5 days, very short duration of time. So I would say when you invest with a money market fund, liquidity is guaranteed. Advantage number 7, the risk is very low. Any investment with a money market fund, the risk is very low. Number 8, you get advantage of compounding of interest. Compounding of interest simply means the interest that accrues from that investment is plowed back to your principal amount. And again, that interest again generates another interest. So it means it is interest on interest on interest. So you have an advantage of generating compounded interest. Number 9, money market fund is good for retirement planning. Now, when I say good for retirement planning, it simply means when you invest a large amount of money, you can always give instruction to the fund manager and tell the fund manager that maintain my principal amount, but every time I have interest on monthly basis, please transfer it to my bank account. So you will only be living on interest and leaving the principal amount to continue generating returns for you. So it's good for retirement planning. Now, another good advantage, it is a passive income. Advantage number 10 of money market fund investment is that it's a passive income. When I talk about passive income, this is what I mean. That money will continue generating wealth for you even as you sleep. You don't have to do anything. Wealth will continue being generated for you. You don't have to be an expert on investment. There are investment experts at the money market fund managers. So your work is just to put your money there for experts, for managers to help it grow for you. So it is a passive income. You don't have to do any effort for that income to be generated for you. Now let me look briefly at the disadvantages. Now they say the lower the risk, the lower the return. Because the risk on money market fund investment is very low, that also means comparatively in investment world, the return is also comparatively low. Number 2, there are costs involved. The fund managers, because they are using their expertise, we don't expect them to manage our monies free of charge. They will be charging a fees. So the cost attached on those investments might water down or might reduce on the amount of income. The second cost that is affected is that whenever you withdraw more than the required number of times, I tell you, there are chances that you're going to be charged. Most Fund managers charge 1,000 if you exceed 2 withdrawals in a month. Now, if you have several emergencies in a month, it means you'll be charged a lot of money. And that means your interest or your income is going to be watered down. And I say the third one is that there may be temptations because of ease of access to your money. There may be temptation that anything small that comes your way, you may rush to the fund manager to withdraw, and therefore you are going to beat the entire purpose of investing. Dear listener, I want to stop there. And again, I want to say thank you. I'm now persuaded, dear listener, that if you are thinking on investing on money market funds and you did not know how to, at least now you have an idea, you have a knowledge, and you can make an informed decision. Therefore, I say thank you for listening to me. Please, if you've not subscribed, please, I request you to subscribe to this channel. Please like this video, and please share this video with those in your contacts. Otherwise, I say, may God bless you. May God prosper you in Jesus' name. Amen.